Brian Winnikin's at World Dairy Expo, and our broadcast being brought to you by Comro Sales and Service, AMPI, Ware Chevrolet, at your Featherlight dealer of Bangor, the Animal Wellness Center of Buffalo Valley, and Annabis Silo of Durand. I'm with Bryan Doherty of Stewart Peterson. And Brian, we're going to talk a little bit about markets. Well, for milk markets, with USDA being closed, we're not getting those cheese, butter, and non-fat dry milk price signals that we normally would get that would help Class 3. And for Wisconsin, kind of throws everything into a little bit of a upheaval. We're kind of flying blind, aren't we?
We are, and so is everybody. So misery loves company, if you will. Yet, if we step back from that, maybe what's important for producers is to recognize that while we may not have USDA information this week to sort of give us some guidance as to where the market may go, you still have a market that's trading, and so we have a futures market to look at, and those analysts that are really delving deep into the analytical world, they're putting out their information as well, and that's being dispersed. So while we're void of some, I don't know if I want to call it critical, but certainly information we're used to, the markets will go on, and what's important for farmers is to recognize that they need to manage the risk, take advantage of opportunities, and pay a little more attention to the futures market now, because that'll probably encapsulate what the general thought is anyways.
Is that for farmers, I guess looking at it from their standpoint, producers, they may have a plan, and their plan has been based on having all of this information. Then when they don't get it, it's like, how do I do? Is that the biggest concern for not only for them, but for folks like yourself?
I think a little bit more
clients?
for folks like us, because we kind of look at those numbers to sort of build trends. Are weekly slaughters up or down? Are we, less cows, more cows, production per week? All of that data. That's the kind of stuff that we do. I don't think a lot of producers, really hover over that kind of information daily. They may read once a week or look at our newsletter or somewhere else, hear the information, but I don't think they make a lot of decisions off of that. And they probably ought not to. Information is generally, once you know it, it's old, first of all. So we're always kind of looking ahead and encouraging farmers to really kind of shift gears and be what I call more market scenario planners, where, once this information comes out, what if something comes out this week that's really negative? If you're not prepared for prices to go down, they go down anyways without you. So it's the preparation for whatever might come out. But it's a disruption, no doubt about it. So we're coping with it like everybody else.
Again, we're talking with Bryan Doherty of Stewart Peterson in West Bend. Okay, you mentioned farmers should prepare. So even with all of this right now, and we're getting ready for the next year, obviously a lot of farmers are doing harvest and all of that, at least in Wisconsin. But dairy farmers, farmers in general, what should they be doing right now to prepare to maybe set up some type of plan in 2014?
Awesome question. I think what we need to do is kind of look at some bigger fundamental variables and ask ourselves, with cheaper corn prices than a year ago, an expectation for more ample and readily available supplies, whether it's corn, meal, wheat. Those expectations are there. Last year at this time, if you might remember, corn was hovering around $8. We didn't know what the bean crop was going to look like. It turned out it yielded better than expected. We picked up about 3 bushels an acre, so that alleviates some tight supply situation. And we may still have that in beans this year, but what farmers really need to kind of look at and expect is that, look, with these bigger inventories, those producers who kind of made it through this last year, and especially the larger ones, probably aren't getting any smaller. So expect bigger production in the year ahead. So now can we get demand to scoop up that extra production? Maybe, maybe not. We don't know. Demand's always an elusive target. But the key, Brian, is for farmers to look ahead and say, okay, where could milk prices realistically go? Down to $13, $14, up to $20, $22. So now we take a look at where we're at, and we prepare ourselves that if prices head down. How do we pull our average up? So we'd like to encourage farmers to start building an average, and really now start looking ahead to all of next year, first quarter, second quarter, third quarter, fourth quarter. But start getting some action plans in place and forward selling some milk on either this little bump up or the next bump up, because rallies, as we've seen in commodities, are getting harder and harder to come by and sustain, and milk is going to be in that same category.
Again, talking with Bryan Doherty of Stewart Peterson. Well, one last question, I guess. What happens if October 17th comes along and there's still no agreement? And one, the government shut down, but two, the debt ceiling doesn't happen. Could that throw commodity markets into chaos or not?
It could. I doubt it. I think cooler heads prevail, and it's still a commodity. Everybody's trying to scramble to put their best analysis into that picture, and there's not a lot of good upside on it. So the markets don't like uncertainty, especially political uncertainty. I guess, from a political view, and I'm a gatherer of information here. I'm not a politician, but it certainly looks as though the U.S. credibility is really damaged worldwide. And while the dollar may get cheaper and help promote exports, that's the silver lining. There's going to have to be a time window when all this kind of gets over, that a redevelopment of confidence has to occur, that the U.S. is the go-to. And that's kind of been the real strength. If you've noticed, like last year in soybeans, Brazil, Argentina had a lot of crop coming. They weren't the go-to by China. The U.S. was, because of logistical problems, port problems, those kind of things. We don't want to lose that credibility.
Again, some great information from Bryan Doherty of Stewart Peterson. And from World Dairy Expo, I'm Brian Winnikins.